Welcome back to Bunnex Investment Group. If you're new, welcome and consider subscribing so that you won't miss any of our videos as we upload. In this particular video, I'm going to teach you two powerful trading setups that are traded off the M15 timeframe, and they can be of much use in these particular highly volatile trading times whereby there is likely a trading war that is going to erupt. All right, without wasting much of your time, let's jump right into the lecture. Right, so we are going to learn about we are going to talk about the M15 cycle, which is basically the backbone of everything that we are going to be talking about. Then we are going to talk about cycle continuation zones. It's actually the second setup that we are going to be talking about. Then third, we are going to talk about the explanation for setup 1, explanation for setup 2, entry criteria for setup 1, entry criteria for setup 2. That is basically laying out the things that you need to see for you to get entries in these particular setups. Then last but not the least, we are going to talk about examples. But that's not all, because we are going to delve into the trading discipline. I'm going to give you a small snippet that will basically help you to trade with a conscious mind. All right, so the first thing that we are going to talk about is the cycle, as I've highlighted on the outline. By cycle, we mean this particular structure. An M15 cycle is the basis of how the market moves. Each and every time we'll be trying to put something like this in terms of structure. We have a starting point, which is basically either at utmost high or utmost low. That is basically a point where there is no price action above, or at the 200 EMA, as I will show you shortly. But basically, we have impulses like 1, 2, and then 3. So it consists of features where we can make entry decisions based upon the position that we are looking at. So we may actually make decisions in these particular points, or at the end, or basically at the start of that particular cycle. I'll actually show you two scenarios where you can make highly accurate points of entry, especially in these highly volatile times. So 3 impulses in one particular direction leads to a reversal. As you can see, the market will be trying to make a reversal. If we get 1, 2, and 3 in one particular direction, we'll actually get, or we'll have a high probability of the market reversing. So whenever we see these impulses, know that a reversal is imminent. We are going to derive the M15 setups in subject from this particular cycle. So this is something that you need to imprint in your mind before we go any further. All right, so continuation of that particular cycle that we've just talked about, when the conditions we will talk about later in this video are satisfied, there will be a continuation, which is this particular point, which is also our basis for the second powerful setup. So as I've said earlier, you need to imprint the M15 cycle in your mind so that you'll be able to apply everything that we are going to talk about shortly. All right, so let's talk about twos. We say trading, like any other business, will require twos. If you go to war, you need your guns. If you go to the field, you need your hose, you need your sickles, you need every tool that is necessary for the job that you are going to be doing. So likewise, in trading, we will also need twos. So for us to speak the same language in this particular video, you're going to set up your charts in this particular manner. Install EMAs with periods as follows. The first one being a 5 EMA. And I'll show you, or I'll actually tell you what's the use of these EMAs. 5 EMA, 13 EMA, and all these EMAs are applied to close. Another 150, 200, 800, and the last but not least is going to be the TDI, or simply download it from the free Telegram channel that I'll leave the link in the description box below. You might find it difficult to install the TDI, but I'll actually give you instructions on how to install the TDI on phone, on mobile MT4, MT5, as well as how you can, as well as the actual indicator that you can add as a custom indicator on your PC MetaTrader. All right, so here are the uses of these EMAs. I've never actually given out the uses of these EMAs on this particular channel, but I've decided to give you the uses of each and every one of the EMAs so that you understand going forth with the videos that you'll be watching on this channel. So these EMAs are very important. They will not give us signals, because a lot of people will start to think when this EMA crosses that one, we're going to get a buy. We are not going to use it that way. That is a wrong way to use indicators. They will help us to smoothen how we see the markets. You see, the markets actually goes up and down, and the markets are actually haphazard. So these EMAs will help us to find a sense of flow within their flow. So 5 EMA is actually called a setup smoothener. If an M is being formed, you can see the M clearly with the 5 EMA, and that is why I love to put the 5 in blue, in yellow, so that I can see when the flows is being issued. You can clearly see using the 5 EMA. Then the 13 EMA is called an entry confirmer, and I'll actually show you how it works when we apply it on the TDI shortly. Then the 50 EMA gives us what we call the intraday trend. What is the daily trend? What is the trend for that particular day that you are observing the markets? The 50 EMA will actually give you that particular trend. If it's going to the downside, you'd see that the 50 EMA will be flowing to the downside. If it's going to the upside, the 50 EMA will be flowing to the upside, basically like that. The 200 EMA gives us the H4 trend, or basically the weekly trend. So we are trying to build up a notion whereby we have several trend showers on one particular chart. So the 200 EMA will actually tell us that the weekly time frame, is it going up, is it going down, and so forth. Then the 800 EMA will give us the daily time frame trend. Is the daily time frame going to the upside or to the downside? And if that is the case, we actually can trade, as I'll show you shortly. Right, so I'll show you when we get to the charts how these actually looks like. So the first setup that we are going to talk about is called the intraday peak formation. It is one of the most powerful setups and one of those that are withstanding the volatility that we are experiencing right now during the Trump era. So the first setup is called the intraday peak formation. It is a setup that comes after the cycle has reached an end. I've talked about and emphasized that you are supposed to photograph that particular cycle that I showed you earlier, where we've said we have 3 impulses for us to reach the end. So the end is where we will actually looking for the M15 intraday peak formation. It's not going to be a W or an M pattern, but it's going to be different. So stay tuned. Don't click away to learn what this setup looks like. So however, to remove the subjectivity, we need to see the following. What is subjectivity? It is a way whereby different traders would start to see different things. And we do not want to have that. We want to have something that is concrete, something that we can see together so that we can have a concrete trading plan. So the starting point of count must be either above the price action. We are saying price action, we wouldn't want to have price action above from this particular cycle that is starting. So we are saying there should be an utmost high, the highest point or the lowest point, or it bounds at the 200 EMA. Those are the 2 points that you are going to initiate your count, as I'll show you. The first impulse must have 1350 EMA cross, and then second and third impulse must start off the 50 EMA issued from the 50 EMA touches. What do we mean by that? I've shown you the template whereby we've said the M15 cycle will have something like this. We are saying the first impulse can only be valid if there is 1350 EMA cross. 13 if 50 EMA cross, then second impulse must always start at the 50 EMA. If this actually started at the 50 EMA, it is a valid impulse. And this must also start at the 50 EMA, be making it another valid impulse. If we have these things in place, we say this cycle is of high quality, right? So a shark fin at the end of the cycle must be seen. We are saying at this particular point, the next thing is for us to see a shark fin using the Traders Dynamic Index or the TDI, which I've said you can download this freely in the Telegram channel that I've left in the description box below. Right, so what is the entry criteria of this particular entry? After you've seen 3 M15 impulse, the next thing is now to anticipate an entry. first thing is to see the three M15 impulses with the qualities that I've shown you. 1350 EMA cross, 50 EMA touch, 50 EMA touch, and we start to anticipate an entry. From the second M15 50 EMA touch, you need to anticipate a TDI shark fin that shows oversold or overbought for buy or sell, right? So a shark fin is when the RSI line on the trader's dynamic index goes outside the bands, and when it crosses the signal line, it's time to take action as shown below. Right, so this is the TDI. We can see these volatility bands in blue, and these volatility bands are basically the governing points of our traders dynamic index. If we see this green line actually going outside these bands, we call it a shark fin. And whenever a shark fin has been issued whilst we are at M15 third level or M15 third impulse, we now prepare to take action. So our entry will be then when this green line and this red line crosses each other, right? So this is where I've highlighted entry point, and here entry point. When this green line and red line crosses each other, we actually jump into the market like that. So here are the examples of this particular setup that I've snipped from the charts, and you can as well go back on those charts to look it on for yourself. Before we see examples for setup 1, check out our free Telegram channel. I'll leave the link in the description box below. I share free signals. I also share free advice. I also share free discussions in terms of trading. All right, so example 1 is coming from GBP USD. That is snipped from March 27, 2025. You can go on your charts right now to see these particular examples so that you can fully concrete it in your mind. All right, so the first thing that we've said, utmost low. This is the utmost low. There's no price action below this particular price. And then we can see a 1350 EMA cross being issued. That is the first impulse to the upside. We can see a 50 EMA touch being issued. That is the second impulse to the upside. And then we can see another 50 EMA touch being issued. That is the third. When we actually reached at this point, the next thing is now to anticipate a move that breaks the high of the second impulse. And when that occurred, the next thing is now to focus on the trader's dynamic index. We can see that there was a shark fin that I've highlighted in yellow. And then when this crossed over, it usually crossed over at this particular point, then the market went to the downside. Our target for this particular entry is the 200 EMA, which is the one in white. So the one in white, this is where we were going to close our entry here, and then target here, and stop loss right above. So you usually will be targeting 1.5 R on this particular trade entry, because we've said it's the Trump era. There is no need for you to stay long within the markets, right? So 1350, 13, the one in blue, the one in red, sorry, then 50, the one in blue, crossed over. That is on gold, April 7, 2025. First impulse issued, right? After that, we can see the market come to the 50 EMA, right? Second impulse issued here, and then the market came to the 50 EMA again. Then at this particular point, we now start to prepare for the shark fin. A shark fin was issued, you can see here, and when this green line crossed the red line, that is where we could have made our entry. Our target right at the 200 EMA here, right? So entry here, target here, stop loss right below structure, right? Last example for this particular trading setup before we jump to the second setup that you also need in this Trump era. This is GBP USD, March 21, 2025. We had a 1350 EMA cross. Then the first drop was issued. The price came back to the 50 EMA, another drop, 50 EMA. And then here we can see a shark fin that was issued when the crossover of RSI line and 13 was issued. We can see the market actually went right to the 200 EMA, basically like that. So these were the entry setups where you were going to make your entries after you've seen all these conditions being ticked off, right? So let's now go to the next setup. The second setup is called the M15 safety. When we are setting for an intraday peak formation that we have just been talking about shortly, we may obtain a condition for an M15 safety, which is setup 2. So basically the theory for this M15 safety is when the market has set the intraday point, right, which is this particular point, and price is above the 800 or below. In this particular case, we are saying price is below the 800 EMA, or 200 has crossed 800 to the downside, right? We expect an M or W at the 200 EMA. You must replay this part until you understand this theory for you to be able to apply this particular setup, right? Entry criteria for that particular setup. The M15 safety is an M or W pattern at 200 if 1, 200 has crossed the 800 EMA after a confirmed yesterday's intraday peak. Yesterday's intraday peak is seen and 200, 800 have crossed. Or this can also be seen when 5200 EMA cross is seen above or below the 800 EMA. If you do not understand this, replay this particular part. So the M pattern must have nameable legs, and target will be at yesterday's low, right? You need to exit at yesterday's low. As I've said, the Trump era won't tolerate you to stay long. That is why you must not swing trade in these particular times. Let's have examples. If you are finding this difficult, for you, I have something very simple which you can use to trade. It's the top 1% traders course. Simple and straightforward, no chaff or BS. See the link in the description box below. That is if you are finding this as gibberish, and if it is very, very difficult for you, you can actually see the top 1 traders course, which I have tried to shorten, to simplify, and to give you very and highly accurate setups. All right, so this is GBP USD April 9, 2025. And we can see that here we had 1, 2, 3 after these touches of the 50. And at the end, we can see this was in intraday peak formation low. And then after that, this could have been an entry. We can see here, we could have made an entry, and then we reached the 200 EMA at the 200 EMA. Why? Because there's a 200, 800 EMA cross, which is the dark blue EMA, and the white EMA crossed here. Therefore, setup 2 was valid. An M pattern was issued. You can see first leg and then the second leg. On the TDI, we can see first leg being outside the bands and then second leg being inside the bands. And then our entry was definitely going to be below the candle closure, below the 13 EMA, which was here, and then our exit at yesterday's low, right? Basically like that. That is what or how the M15 safety is traded. If you do so, you actually see yourself making it with this particular setup. All right, so this is the last part of the video. I might have spoke for a long period, and you might be getting tired of absorbing that much information. You now need this for you to actually apply whatever that I've taught you properly. So for this to work, you need to put in effort. And by effort, we are not saying effort of working hard and sweating, but effort of being aware of your emotions all the time. At each and every second, you must be aware of how you are thinking up there. You need to actually be able to control yourself, and you cannot be able to control yourself if you do not understand how you are thinking at any instance of time. So triggering an entry is the easiest job, but waiting for the right separates real traders from dopamine chasers. There are other traders who just are in this business for the sake of having dopamine release and then be happy. But we are saying real traders waits for the rightful points of entries. If these setups are difficult for you, try the top 1% traders course explanation. This is actually simplified. This will work, and this is something that I've actually bet myself to refund, full refund, if you do not see money in 2 months of applying the exact same things that I've taught you. So on that note, this is the end of our today's video, and I'll see you in the next one.